Hi everyone, welcome to my channel. In this video, I will explain what is ETF and how does it work. ETF stands for Exchange Traded Fund. It can be broken down into two parts, Exchange Traded and Fund. What is fund here? Fund is nothing but money is collected from investors and combined into a pool of called an investment fund. What is exchange traded? Exchange traded means this investment fund is listed on an exchange and traded like individual stocks. What is exchange traded funds? An exchange traded fund is a type of mutual fund that can be bought and sold on exchange. Just like stocks, investors put their money into any ETF based on their needs. This money is combined into pool of investment that is called investment fund and managed by a fund manager who invests it in various securities like equity, bond, commodities and currencies to achieve a specific investment goal. Various type of ETFs are available to invest. For example, a stock ETF track the index. A bond ETF might invest in government or corporate bonds. A commodity ETF might track the price of gold or oil. ETFs are different from mutual funds. However, they have some quantities of mutual funds, like being bought or sold at the end of the day based on their net asset value per share. But unlike mutual funds, ETFs can also be traded during the day at market prices on an exchange. On the exchange, the ETF units can be purchased in minimum lot of one unit and in multiples thereof. Where you can invest in a ETF, you can buying a small piece of large portfolio of stocks, bonds or commodities, which helps to minimize your investment risk. The price of particular ETF will be determined by the demand and supply of the ETF. How does ETFs work? Generally, ETF provider or ETF issuer could be fund house or investment company or AMC sponsor. The AMC or fund house will appoint authorized participants and market makers of their ETFs to create liquidity on the stock exchanges. The market makers would offer daily two-way quotes, that is, buy and sell quotes in the market. Authorized participants and market makers have different roles, but some companies play both roles in certain ETFs. Authorized participants, which are usually investment banks, brokers, dealers, distributor, or large financial institution. The authorized participants' jobs to acquire the securities that the ETF issuer wants to hold. For example, if an ETF is designed to track the performance of the Nifty 50 index, the authorized participant will buy shares of all the Nifty 50 constituents in the same weights as the index. The authorized participants deliver basket of securities, that is purchased shares, to the ETF provider and receives ETF creation unit, which is large bunch of shares in exchanges. The authorized participants can then hold those shares in their inventory or sell them to investors in the secondary market via stock exchange. Individual investors do not participate in the primary market. Pros and cons of ETFs. Pros, that is advantage of ETFs, that is diversification. For example, by investing in a Nifty ETF, you gain access to diversified portfolio, transparency. Most ETFs disclose their holdings daily, so investors know exactly what they own. Flexibility. Investors can use ETFs for various strategies like hedging, leveraging, etc. Liquidity. ETFs can be bought and sold on the stock exchange during the trading hours that provides liquidity. Easy. This is easy to trade. Cons. That is disadvantage or limitation of ETF. Market risk. Like any investment, ETFs are subject to the risks of the market they track. Liquidity risk. Some ETFs might have low liquidity, leading to higher trading costs. Tracking error. The performance of the ETF might slightly differ from its benchmark index due to fees and other factors. Please note, ETFs are considered a safe product for risk averse and first time investors who want to market linked returns. That's all. Thank you. Thanks for watching.